Hi, everybody. We had a lot of questions that came in last night and today related to payroll tax credits and also the Senate bill that just passed last night, which is great. So I'm going to start off with the Senate bill, and this is not a full analysis. We're going to have a webinar coming up and some publications later today about guidance. It's more around what do you need to do right now related to the Senate bill, specifically with respect to the loan package. The loan available, what's going to be made available is effectively four times your average payroll obligation, debt obligation, rent, and utilities. So what you need to do right now is just take a look at, you know, last calendar year. The time period that's actually going to be the measurement period is going to be different. It's going to be based on when your loan's made, 12 months preceding to that. But for right now, just take a look at your last calendar year and add up those numbers, which again are payroll, rent, utilities, and debt obligations, meaning term debt that you might have had with a bank. Divide that number by 12, and that's going to be what's potentially available. For restaurants that have tipped employees, you get to use minimum wage, I believe, so you can round up. And then if you have a pretty big payroll, there are some limitations on what a person can get made where it gets reduced. So for this purpose, just use $120,000 as a max cap on payroll, because some element of this is going to have to get back off. We'll have some more guidance on it, but that's going to be what's available to you. And the great thing about it is that the amount that you spend on payroll from March 1st through June 30th of 2020 is going to be forgiven and not included in your income. So that's a real gift, I think, to a lot of us. So that's the first step you should do. The second step you should do is just see if your bank has the ability to do SBA lending, because that's how the funds are going to get distributed, is through banks. And if you don't have a relationship, or you haven't spoken to anybody in a while, now would be a good time to start setting up some relationships. We'll also try to figure out how to best work with our referral partners to help you guys out in terms of getting the relationships you need. But in terms of the other questions that got asked, one of the questions yesterday was around, if you want to provide benefit to people that are on paid leave, can you do it and then not do it? My advice on that one, even though there aren't any real rules around it, is that first off, it is for any business that's above 25 employees. Up to 500 is supposed to do it, unless you apply for an exemption from the Department of Labor. I generally would say if you're going to do it, you probably need to stick with doing it, just based on how general DOL rules work. All that said, in the loan program, the forgiveness will be offset by any credits that you receive back, and at the same time, any amounts that you paid pursuant to the FMLA Act can be bundled up into your loan request. So I think either way, it's going to get funded by doing it. So if you have the cash available to do it, and you're okay taking the risk that it's all going to get repaid back to you, I would go ahead and pay it if you're trying to keep the band together. In terms of unemployment, for independent contractors, people like that. So the two big things that came out of this were that unemployment is going to be available for independent contractors, as well as regular employees. And then when it comes to restaurants and tipped employees, I believe it's going to be minimum wage, but there is some special consideration for tipped employees to ensure that they're taken care of as well. There's some questions around should I lay people off then rehire them, and unemployment rates. So to break that down, in terms of laying people, again, this is more of just a cash flow decision from my perspective, is that since this stuff's likely going to get repaid anyway, if you believe you're going to be able to start up and reopen, and you have the cash available to do it, I would probably just go ahead and wait and get the loan. If on the other hand, you don't have the cash available to support that, or otherwise you feel a little bit risky about the future, otherwise just don't want to take on the risk of potentially having some debt hanging out there, because the amount that's going to be forgiven is the amount spent on payroll debt. It's not anything else that you might spend the money on. That'll be a normal SBA loan after that, which is usually a 10-year amortization period. So if you are otherwise inclined to keep your employees together, I would go and do that if you have the cash. In terms of the unemployment route, only thing I'd be worried about is just whether or not that causes any negative goodwill with your employee base, because you're going to want these people back when you're ready to get back and resume business operations. So I think that's going to be a case by case basis. I think from a cash flow perspective, it's going to end up being neutral. It's just a timing difference. So you're just going to have to evaluate what's that going to do from an employee goodwill perspective, and what's the guarantee that they're going to come back. I've seen some language around letting people know that, hey, this is a temporary furlough, you'll still have a job, I just can't tell you when, as a way to potentially lock people in a little bit tighter if they're going to have to go on unemployment. This question around the funds that are going to come out in terms of the free checks to individuals. Pretty much that applies to any earned income, which is what you really earned, plus Social Security, plus anything that you took in retirement distributions. There are some floors that are there that you have to pass over to get money, and then there's some phase out limitations that start at $75,000 individually, and then $150,000 married filing jointly. Phases out completely at $100,000 single, and roughly $200,000 married filing jointly. So that's kind of your window of where you need to get to. And then really the last question has centered around, what if I don't have any employees because I'm either in vacation rentals or something like that. We'll have some more guidance out later on that, but generally you still could apply for relief under the program. It's just that your variables are going to be probably debt service, utilities, and operating costs, because you're not going to have employees in the mix, and there wouldn't be an amount available for loan forgiveness. The other route that could be taken in that case, because if you have a permanent loss of revenue that's just not ever going to come back, because time is something you can't get back. Like you can't get back a summer vacation rental season. For that's probably where the disaster relief funds are going to be the most applicable for you. So I see really two things happening there. One, you could apply for mortgage relief, which is going to be part of the Senate bill in terms of what you can get available. The second is later on in the Senate bill, there is some money set aside for loans that can be made associated with people that have suffered economic losses. I'm not really sure how that's going to work, because they've modeled the language more around the bank bailout from the TARP fund than anything else. I think that was really meant for big businesses, but it may end up applying for small businesses. Then lastly, the SBA's disaster program that everybody's been applying for. I really think that that'll be part of maybe a forced stimulus package, or they'll fire up, some more attention to helping people get whole where they've suffered, and can demonstrate that they've suffered real economic losses. So it'll behave more like a hurricane fund or the 9/11 fund is what I would see happening in the future. So, if you don't have employees, definitely add up what you've been spending in debt service and utilities, because that's available for a loan package, and then we'll have some more guidance later about what can be done about economic losses. So that's it for today, and we'll have some more guidance out hopefully later on today on the Senate bill, and hopefully the House passes it tomorrow. And then we will be hosting a webinar, I believe, on Tuesday with a lot more details on the assumption that something's passed here going forward. So I hope this helps. And again, remember to check out the BGW CPA YouTube site. That's where all this is sitting. And then also our website on the coronavirus page also has links to any thoughts that we have or help that you guys might need. And also remember, you can also email FAQ@trustbgw.com to get your questions answered. So thanks a lot, guys.